team is ready. Owen, are we good? Okay. Good morning. Welcome to the Senior Center. Thank you for joining. I am Sally Kearns. I'm the state representative for the 13th Essex District, and that includes the town of Danvers, Peabody Ward 6, Middleton Precinct 2, Topsfield Precinct 2, Wenham Precinct 1A. So, but no matter where you're from, this is helpful information. I'm very grateful to Brian Lynch of the Department of Revenue for the Commonwealth of Massachusetts, who kindly agreed to come here this morning to describe and explain one of the measures that we passed last year in a package of tax changes to help people. And the one that Brian is going to discuss is the senior circuit breaker. And he has how many years of experience at the DOR?
Yesterday was 39.
Well, so I think he knows a little bit of whence he speaks. Yes, that is worth comment. And without further ado, I think I've set the table pretty well. Information, knowledge is power, and so we want to make sure people know if they're eligible for this particular measure.
Definitely.
You gonna go without your stool, or
Yeah,
do this stool for Q&A?
in case I need to sit down halfway during that, I'll have it.
All right, okay, beautiful.
Well, thank you, Representative,
away.
for the invitation to be
Thank
here
you.
this morning with everyone. Thanks for coming out. I hope it's worth the trip for you. So as Sally said, I'm Brian Lynch with DOR, State Tax Agency. I'm going to talk about the Senior Circuit Breaker Tax Credit. Kind of a crazy name, circuit breaker. People say, what's up with that? I had a woman call me and she said, my husband's an electrician. Are we eligible for some type of tax credit? And I said, I'm sorry, but that's not really the case. When the concept was developed many years ago, whoever brainstormed, thought it up, they used the analogy of an electrical outlet, that when an electrical outlet becomes burdened or overwhelmed, the circuit breaker is activated or tripped to provide some relief for the burdened outlet. And when I've kind of Googled circuit breaker, I've seen it applied to other things, like even in my town, I think there are some other programs that like there is some relief that might kick in, like basically financial relief for different things, like when it becomes a burden. But really, this credit is available through the Commonwealth of Mass. It's been around for 20 years. It's really designed for folks that are 65 or older, who are generally on a fixed income for the most part, right? But we all realize that our real estate tax in our water bill seems to go up every year. So even sometimes maybe when you retired a few years ago, pension was great, it was pretty good. But now that it's been 10, 20 years, like maybe things are a little bit more challenging, right? So this credit is in place, again, for homeowners. It's also available for renters. We're going to talk about renters in a minute too, because renters, we're not going to discount them. They're eligible for the credit as well. So the calculation, I know sometimes people don't like to, no one likes to talk about taxes. I understand that. But this is really worth listening to and paying attention to. So the calculation's very straightforward. It's very easy. That's why they send me. If it was more challenging, we'd have someone else, Sally. So what I want you to do is people should have a pretty good idea of what their income is like, ballpark, generally. If you include your Social Security, maybe your bank interest, you took an IRA distribution perhaps, if you have a pension. So all of those statements that came pouring in January, right? So if you kind of bundle them up and then take 10% of that amount. So that's we're halfway there right now. 10% of your total income. We're going to compare that amount to what you paid in real estate tax, and you're able to add half of your water and sewer bill to your real estate tax. By adding half of your water and sewer bill, we're trying to increase the credit for you. We're trying to boost it up a little bit if you're going to be eligible, right? We're going to compare the two amounts. This credit is going to help someone out when you're over 65. That's the first criteria. When your real estate tax and half your water bill becomes greater than 10% of your income. So that's the general idea, is like 10% of your income is kind of a break-even point. And when your real estate tax and half your water bill becomes greater than 10% of your income, it's considered that this is becoming challenging. Your real estate tax is becoming a burden, and that's why this credit is available through the Commonwealth of Mass. As the representative mentioned, in the fall, we heard on the news about a tax relief package, that there were various different things, credit for families with kids and dependents, and that was increased, and some other things that we could talk about if you want. Happy to do that. But today, this morning, we're kind of focusing on the circuit breaker. The circuit breaker credit more than doubled, and you can see on my handout, I have numbers for 22. Last year, the maximum credit for circuit breaker in 2022 was $1,200. As a result of the tax relief package that was passed by the legislature, the maximum credit has increased to $2,590, so $2,590, so more than doubled, right? Not that everyone's going to get the maximum. I wish that were the case, but everyone has different income, and everyone pays different real estate tax, a different water bill. And I always say that at the end of the presentation, if you want to run some numbers by me, sometimes people say, like, did I hear you right? This is what I think what my calculation would be. I'm happy to do that. I can't do your tax return for you this morning, but I'm happy to answer your specific questions. I don't expect anyone to kind of say this is my income or this is what I paid in real estate tax in a public situation like this, right? So very straightforward. There is some income criteria that we need to think about as well. So on my handout, in the right-hand column, if you're single, your total income has got to be under $69,000 last year. If you're married filing together with your spouse, that income is $103,000 maximum last year in order to be eligible in the running, right? As long as one spouse is 65 by the end of the tax year, if the numbers work for you, then you're in the running. Both spouses do not have to be 65 in the tax year. Some folks file as head of household because they have someone in their household that they're providing more than 50% of their financial support. Maybe a grandchild, another relative, someone else that they're helping out, living with them. That filing, that dollar amount has to be under $86,000 last year, okay? So pretty straightforward, really. 10% of your income, that's really the crux of it. And what are you paying in real estate tax to get together with half your water bill? Once it kicks in, the credit is working for you. Up to whatever that amount of increase over 10%, that's going to be the amount of your credit. The nice thing about this credit, it's refundable. And what I mean by that is most tax credits, whether with the federal government or with the Commonwealth of Mass, if you get some type of tax credit, you always apply the credit towards your tax liability. We always want to bring our tax liability to zero, right? That's the goal. Let's wipe out the tax. So the credit, that's how it works. You apply the credit to your tax liability. Most credits, whether it's federal or state, once you do wipe out your tax liability, that's kind of the end of it. That's as good as it gets. They say, like, well, how much more do you want, right? With circuit breaker, it goes a step further in that if you are able to wipe out your tax liability, and if you have a balanced credit, you're going to get that amount refunded. We'll send you a check, we'll do direct deposit, we'll put the money in your bank account, whatever you want to do. There are some folks that say to me, in a situation like this, maybe there was guys playing cards in the other room, and before we started, we might say, hey, why don't you join us? We're talking about a tax credit, might help you out. It might be worth a couple of dollars to listen to me for 10 minutes. They say, oh, no, it's all right. I don't file taxes. I haven't filed one of those tax returns in years because the state doesn't tax Social Security. Also, public pensions, those are contributory pensions, people that are school teachers, firefighters, police officers, they're paying into this mass retirement system. When they take the money out, when they get the benefit, they pay federal tax on it, but not state tax. So depending on what people's income is, again, everyone has different sources of income, different types, right? Some people don't have a need to file a state tax return, but that doesn't mean that they're not eligible or entitled to the circuit breaker credit. So for the person that doesn't have a need to file a state return based on their income, if the numbers work for them for circuit breaker, that's the amount that they're going to get that amount refunded in full. We'll send them a check for the whole thing, put it in their bank account, whatever they want to do. So that's kind of a nice feature. Again, it's unusual because most tax credits don't operate that way. Let's talk about the renters quick. So renters are eligible as well, provided that renters are not living in any type of subsidized situation. Like if their apartment's subsidized by the federal government, or the Commonwealth of Mass, or they're in some type of maybe charitable, like religious type of arrangement that doesn't pay real estate tax, unfortunately, they wouldn't be eligible for the credit because it's kind of felt that they're already getting a benefit, like an advantage, by having the reduced rent, right? But for renters, the income measure is the same. We're going to look at 10% of someone's rent, 10% of their total income. And we're going to compare that to 25% of the rent that they paid for the year. If 25% of someone's rent is greater than 10% of their income, this is becoming a challenge. Their rent is getting a little bit of a burden, and they are eligible for the circuit breaker credit, just like the homeowner, in whatever that figure, whatever that amount might be, over 10% of the income, that's their credit for the year, okay? It seemed like in the past, it seemed like a little bit more difficult for renters to qualify, but now that the rents are getting outrageous everywhere, renters seem to be qualifying a little bit more often, I find, in my travels. So that's really the crux of it. It's really straightforward. I should mention that on my sheet, you have an 800 number for us. If you think of something later, or when you're working on your tax return, if you want to call us, we're happy to speak with you. We also have, providing you with the website at the bottom of the page. There's some really helpful information about circuit breaker and other things as well, like on the DOR website. So very helpful. There's a search field that all you need to do is type in the topic. You're working on your tax return and you're not sure if a certain type of income is subject to tax. Just type it in the search field. You have a question about circuit breaker. Boom, on the website, we'll probably have about 4 or 5 pages of information about circuit breaker, okay? Even maybe if you could put your property in a trust. And just because the property is in a trust doesn't mean that you're no longer eligible for circuit breaker, because you are, okay? So there's some little nuances related to having property in a trust, but if the numbers work for you, you're still eligible to do it. Yes? Excise, okay, good question. So the question was up front, is my excise tax included in the taxes that I'm talking about? So maybe the excise tax on your car with the town? Unfortunately, no. The excise tax is not part of, we're just strictly talking real estate tax. Good question, though. Yes.
Yeah. Okay. I live in a condo, and our HOA fee has a water bill.
Right.
We don't get a normal water bill.
Okay.
What do we do?
Okay, so the question was, I'm in a condo, my HOA fee includes the water bill as well, right? Some other maintenance fee and that type of thing, right? Yep, so you're still entitled to take your share of the water. You might need to get in touch with whoever's paying the water bill, whether it's a management company or maybe a trustee or whoever is paying the bills for the association. Find out what was my share, or what was the total water bill that we paid. What's my share, usually based on your ownership percentage?
Correct.
Yeah, so we could use that same percentage to determine your share of the water bill, and we're going to take half of that amount.
Okay, thank you.
Perfect. Okay, good. Yes.
Yes, if you're a renter and you pay your own utilities, does that count in the rent?
Okay, good question. So I'm renting and I'm paying my utility expenses as well, like electric and maybe gas or something. But unfortunately, there's no provision for utilities. It would strictly be your rent. Yes. Yes, sir. Sure.
Maybe it is not really related, but I use TurboTax. Does TurboTax takes care of something like this?
Good question. Okay, excellent. So TurboTax.
Thank you.
Yes, TurboTax should incorporate the calculation for circuit breaker. It definitely does. It reminds me of also on the DOR website, we have a free application that you can file your state tax return with us. It's called through Mass Tax Connect is the application on the website. So if sometimes you use TurboTax and you pay to file your federal return, then they may ask you, do you want to pay an extra fee to file your state return? And some people just say, yeah, I'll do it because I don't want to enter all that information all over again. But you don't have to. You could just come to the DOR website and file your state tax return with us for free. Our application includes or accommodates the circuit breaker calculation as well. Okay, the website address on the bottom of my handout, so we have the www.mass.gov/DOR. And again, use the search field. It's really great. There's a good search engine there, and there's a lot of information to be had. Of course. Do you have my handout? Okay, right at the bottom, I think it's in blue.
Oh, okay.
That's the address. www.mass.gov/DOR. Of course, yes. What questions might we have? Really? Yes.
If you're going to include trash fees with the water, do we have to subtract that?
Yes, there's no provision to include fee for trash, and although, so it's going to be one fee that includes both?
They said they're going to include the trash fee with our water bills
I don't know if it's,
next year, and
Yeah.
that's for this year.
if the trash fee is separately stated than the water, I would say no. If the whole thing is coming through as one fee, kind of under the umbrella of water, you think it's going to be separate? I would say separate too. Yeah, that if it's separate, then unfortunately, no, it's not included. Yes.
I just wanted to add, for anyone that is eligible for a property tax abatement, you can request to not have that trash fee. If you're eligible for that, they call it I can't remember what, a statutory exemption, they call it. If you're eligible for that, then you're also exempt from having to pay that trash fee from the town hall, but you have to ask.
Good point, thank you. There are some tax breaks that are available through cities and towns, like through all of them, not just Danvers, but all the cities and towns are in a position to offer people maybe like a veterans or like a disability reduction to try to reduce your real estate tax. But I will say that locally, the cities and towns, if you're looking for some help from them, there's an asset measure that they use, that they look at. So they want to know what you might have in your savings account, what you might have sitting in an IRA account. Which is different than the credit I'm talking about, is we're only interested in the income that's earned on those assets. So we want to know how much interest you earned, but we're not going to ask you how much money you have in the bank. We want to know what the IRA distribution was, how much money did you pull out, but we're not asking you how much money is in your IRA account. So there's some like little nuances, little differences between the state, how they look at it, and how cities and towns do the calculation. Yes? Yes?
Concerning the amount you get from Social Security,
Yes.
what percentage is it? You mentioned at the beginning, you mentioned the total security tax is not taxed.
Right.
But usually they deduct from the income.
Yeah. Social Security is tricky because it can be taxed by the federal depending on what your other income is like. So the way the IRS operates is when you do your 1040, your federal income tax return, they want to know how much other income you have. Like they want to know what your IRA distribution was, what your bank interest was. I want to say if you're single, that if your other income is beyond $25,000, that's when they're going to begin to tax your Social Security. If you're married filing jointly, the magic number used to be $32,000. And if you had other income aside from your Social Security, if you married joint over $32,000, they would begin to tax your Social Security. And there's a terrible calculation. It's awful. It's like a whole page of like, add half of this and include this, and then take line 6 and subtract it from line 10. And it just makes you crazy. Like, I don't know why they have to make it so challenging, but it is. But anyway, that's the federal, right? The state never taxes your Social Security, never. So even if you look at the state tax return, there's no place to put Social Security because we're not taxing it. You don't include it as income for Massachusetts. However, when we're trying to determine if someone is having a hard time paying their real estate tax, we need to look at your total income for the year. So we need to get like a true picture. Even though we're not going to tax your Social Security, we want to know if you have the resources or the funds to pay your real estate tax. Again, the whole idea behind this credit is to help someone over 65 that's having a difficult time with their real estate tax. That's really the crux of the whole thing. Yes,
I'm wondering is it based on gross income?
gross income, yes. Yep, good question. Gross income, that's what we're talking, yes. Yes,
Danvers is a town of 27,900 people.
mhm.
How many residences or tax returns qualify for this circuit breaker? In the past, I mean, you said that this has been in existence for
Yeah.
10 years.
I mean, I'm good, but I'm not that good. There are 351 cities and towns in the Commonwealth, and people from every city and town qualify for circuit breaker. I can understand your question, but I don't have an answer to that one. I can't tell you how many people, I can get an answer for you, I can find out, but I don't know how many people in Danvers qualified for circuit breaker last year. It's fair, right? But I can get the answer for you. And give me your contact information, I'll be in touch with you. Oh, good, good, okay. Excellent. Hi.
Hi. Did you say that mass retirement is not subject to state taxes?
That's true. So mass retirement is not subject to state income tax. It's taxable federally, but not with Massachusetts.
But it does count towards your 10%.
It does.
calculation.
Again, we're trying to get a true picture of what your income is like. And do you need help with your real estate tax? Yes, I do. Someone else had a, okay. We could go a step further in that for people that are really having a difficult time, this might be kind of just good to know, you can file this in the back of your head. There's a deferral option in Massachusetts where cities and towns need to offer people that live in their town that do not have the resources to defer their real estate tax. So you go to town hall, you talk to the assessor, you're saying, I can't pay my real estate tax, this is ridiculous, I can't eat if I'm gonna pay my real estate tax. The town or city or town will allow you to defer the tax, to put it off until the property is sold. And when, at the registry of deeds, when the deed is transferred, whether it's to family or you sell your house to the new people, the new family that's gonna move in, that's when the town is gonna get that real estate tax that has been deferred or put off. So, you know, it's a nice option for people that are having a difficult time because when their house is sold, they're probably not gonna need the funds. They're struggling right now to pay real estate tax. And then when they do sell their house or their kids inherit it or whatever it might be, the funds are going to be there to pay the real estate tax. And it could really make someone's life easier. That's why I mention it. You know, that's why I bring it up. Is there any septic in town? Oh, no. No, no septic. Okay.
But if you wouldn't mind
Yeah.
getting into it a little bit, because we will share this program
Okay, good.
with neighboring communities and all
Okay.
of them. Middleton,
Mm-hmm. Okay. I always like to bring it up because it's another one that people don't seem to know anything about septic. And why would you? Because it only comes up when you go to sell your house with Title V and the septic system failed and we need to put in big money in order for us to sell a house. We've got to replace the septic system. Anytime we talk septic, it's very expensive, right? Big money. So the septic credit has been around for a while as well. Again, people don't know about it because you didn't have a need to know about it, right? But part of the tax relief package in the fall, there was a very significant increase in the credit for people because the legislature knows that it's very expensive for people, it's a burden, right? So if you need to replace your septic system or make a significant improvement in order for your septic system to pass Title V inspection, whatever your cost was to do that, up to $30,000, that's the max. That's the cap, right? We're going to calculate the credit that you would be eligible for. We're going to take 60% of your expense. If it only cost you $25,000 to do it, we're going to take 60% of $25,000. If it cost you $40,000 to do it, again, the cap is $30,000. So we're going to take 60% of $30,000. Let's work with the cap amount of $30,000, right? Because I'm familiar with the numbers, so let's go with that. So 60% of $30,000 is $18,000. You are going to have a tax credit with the Commonwealth of Mass of $18,000. You can't use it all in the first year. It has to be spread out over the course of 5 years. So for the next 4 or 5 years, every time you do your state tax return, you know that you have this septic credit available to you because pretty significant expense in that when you did it, you're going to carry the credit. The credit doesn't go with the property. It's yours. It was your expense. You are eligible for the credit. You take it with you. There's no age requirement for septic credit. You could be 30 years old and sell a house that needs to be, I need to replace the septic system. I didn't know, but now, so they have the expense as well. And so they're eligible. No age requirement for septic. There's no income requirement for septic either. So on my handout, we talked about with circuit breaker, how there's different income qualifications. There's no income qualification for septic credit, okay? But again, maybe it doesn't really affect you today or this week, but down the road perhaps, or someone, you have family that live in another town, right? And it might be an issue for them. And again, I find that it's kind of an unknown thing because how often do you do that? Not very often, right? Is that helpful? Any questions on that? Okay. All right, so any questions in general?
Wondering when you said about the tax credit, the paying of interest, do you have to pay interest if you don't pay your real estate taxes?
Good question. Okay, so we're going to defer, having a hard time paying my real estate tax, the town is going to allow me to defer it, right? The town is going to charge you interest on it. All the towns are different. I want to say like around maybe 6%. Ballpark, but I don't know. Where they're all different, it's hard to kind of keep track of them. The other thing that people don't like about it is the town is going to put a lien on your property, which people don't like that. They put a lien on my property. But you know what? It's just a little sticker at the Registry of Deeds that they slap on, and it comes off when the house is sold, and you get that big check. That's when we're going to pay off the city or town of whatever amount has been deferred plus the interest. Good question. Yes?
I think this question already been asked, but I just wanted to ask it again.
Sure.
The taxes are gross taxes and not after the deduction, so they're before the deduction.
Okay, good point. So we're talking gross income, and we're talking gross tax payment. So let's say that your tax bill with the town was going to be $6,000, but you did the senior work program, or they were able to give you some type of reduction, maybe a veteran's benefit or something, whatever it might be. We're talking, when I talk real estate tax paid, it's what you actually wrote the check for to the town, what you actually paid. So again, it was $6,000. They gave you a break of $500 for some reason. Ultimately, you paid $5,500. That's the figure. That's the amount we're working with. Okay?
Thank you.
Good question. Yes. Okay.
This has been great. Could you talk a little bit, I know that we invited you here to talk about the senior circuit breaker, but we also did the caregiver or child care. Can you just, folks here might have children who might be able to benefit from that. Just a quick.
Happy to do. Okay, thank you. So Sally mentioned, again, part of the tax relief package in the fall, right? There was a significant increase in the credit that is available for people with children, or not everyone has children, they might have other dependents that are living with them. So increase to those dependent and child tax credits. Years ago, those credits used to be deductions. A deduction is not as good as a credit. A deduction, I'm going to take $1,000 off of my income, so I'm paying $1,000 less on my tax, my taxable income is $1,000 less than it was going to be reduced. The state tax in Mass is 5%. So if you get a deduction, you're really saving 5% of that amount. A tax credit is different because a tax credit is dollar for dollar. If you're going to get a $1,000 tax credit, that's pretty significant. That's $1,000. It's not 5% of 1,000, it's 1,000. And let me see. Let's take it a step further. I should know right off the top. I'm going to go to my tax booklet here. The tax credit that we're talking about is $310 for each dependent or each child. There's no limit. Previously, before the tax relief package, it was capped at 2. So people that maybe had 4 kids, they were able to get the benefit for 2 of them, but not 4. The cap has been lifted. And then next year, the credit's going for 2024, when we're doing taxes a year from now, the credit has been increased for 24 as well. I think it's going to be up to like $415 per dependent. Good question.
Be 2 children and an elder
Exactly, yeah.
parent.
Yeah. Anyone, a dependent can be anyone in your household that you're providing more than 50% of their financial support. So commonly, probably most common, children, but not always, can be other relative or someone else in your household. Good point. Other questions? Yes.
Also included in that tax package
Yes.
was, I think, changes to the inheritance law, inheritance tax.
Yes.
Could you
Okay.
talk some about that?
Exactly, right. Okay, you're right. So it was part of the tax relief package that went through in the fall, and it's related to estate tax. So previously, anyone, if you're when you passed, if your estate was valued at more than $1 million, in Massachusetts, the estate tax kicked in. And unfortunately, the way it was designed is as soon as you go over $1 million, this is the old thing, the whole thing, all of it was taxed by the with the estate tax, right? That, we can look into that. I don't know the exact rate, because I never worked in estate tax, but, sorry. But the way that they've designed it now is they've raised that dollar amount up to $2 million. So the first $2 million of your estate is not subject to Massachusetts income tax. And then even if your estate is greater than $2 million, it's not like you're going to pay tax on the whole thing like it used to be. It just kicks in whatever's over $2 million. Yes. Good question. I'm glad you mentioned that.
When does that take effect?
Any death after 1/1/23. Or is it 24? Might be 24. Might be. Okay, good question. So we had a question up front. Where do I get the form that's mentioned on the handout? I did bring some tax books, and the form it's in the tax book if you need it. You're welcome to one of these. Also, all the forms are online. If you go to our website, you can get the CB schedule. And let's say that you're just learning about the circuit breaker credit today, weren't familiar with it before. You think you might be eligible for the prior couple of years because you've been 65 for the past few years, and you have the expense. There are 2 things you can do. If you're someone that didn't have a need to file a state return, because Social Security, public pension, whatever it was, I don't file that. If you're eligible for the credit and you want the refund, you have to file the form. You have to start with that. Sometimes people say to me, I did file, but I never heard of it. I must have overlooked it. I wasn't aware of it. You can always amend or go back and correct the return that you filed for the prior couple of years. but you do need the right schedule. So just like on my handout, the numbers change a little bit. The schedule, you'd have to get the Schedule CB for 22, Schedule CB for 21, Schedule CB for 20. If you go to a tax professional to have your tax return done, they should be very familiar with this. Again, this credit has been in place for 20 years. It shouldn't be any mystery to someone that does taxes for a living. Number one, they have all your financial information, so they know what your income is like. Number two, we all have a requirement in the Commonwealth to have health insurance if we can afford it. When you're 65 or older, you get Medicare, and that meets the requirement to have health insurance. But on the schedule, the healthcare schedule, to show that you do have Medicare or health insurance, the first question is your date of birth. So the tax preparer should know that you're 65 or older, he's got your income. The only question he might say is, what did you pay in real estate tax, or how much did you pay in water bill? But again, I think it should be part of the conversation that you would have with the tax professional. Yes. Yes.
Medicare.
Yes.
Is usually deducted, right? The Medicare concerning taxes.
From your Social Security benefit? Like you get your Social Security benefit, but they subtract the Medicare premium, right?
Right.
Unfortunately, like in my income calculation, we have to work with the total figure of Social Security without the reduction of Medicare. I'm with you, though. I
And
follow.
the other one is if you have insurance like Blue Cross or something like this one.
Right, some supplemental
Is this
plan, right?
considered expensive or it is also helpful concerning tax-wise?
Okay, yeah, sure. So the question was, in addition to Medicare, I also have a supplemental plan with Blue Cross or Tufts or someone else like that. Unfortunately, there's no provision on the state return, and I'm not aware of anyone on the federal where you can deduct what you're paying for health insurance. I'm not familiar. No, I would say no. No to that. Okay.
Great.
And other questions before we wrap up? Again, I'll be here if you want to talk to me one-on-one. Happy to do that. You can run some numbers by me, ask me a personal tax question if you want. So I want to thank you for your attention. And again, I want to thank Sally for the invitation to come out.
I want to thank you for coming, Brian.
Okay.
This was, I could not have provided this level of detail and insight into, I knew it was a good measure, and we voted for it, and there was no question it would benefit people, but to know precisely how folks can access it is really, really helpful.
Great. Good,
Thank you
good,
so
good,
much.
good. Excellent.
Thank all of you for coming, and we'll be here for a few minutes. I'm actually running off to a Ways and Means hearing in Burlington today. We're all over the state right now, so we're spending, we're evaluating, but this has been
Educating.
educating. Brian Lynch, DOR, thank you so
Okay.
very much.
Thank you. Thank you, everybody, for your attention. Thank you.
Should I end it?
Is it, it's not
I hope it helps.